All right. Well, again, Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome again to Wall Street to Bay Street. Of course, we used to have this weekly, but now we've changed it to a monthly webinar setting, primarily because the market is pretty volatile and there's a lot of questions that you may have, and I think the webinar format that allows you to interact with our portfolio manager is, I think, might be the best fit at this time. So again, welcome. Today we'll be talking about what's been happening in February and what's happening in March. Of course, the conflict in Europe, is just about everywhere, and it affects everything. And I'm quite sure investment world and the finance world is no exception. And we'll dive into that a little bit today and try to, give some direction on a few areas. Just to let you know that this webinar and all of our webinars are for educational and informational purposes, and it's not intended to be advice of any sort for your investment choices. Again, just a quick introduction. My name is Salahuddin, and I'm the marketing manager. And every week every month on these webinars, we have our portfolio manager Nadeem Mian, who's also a certified financial planner. Like I mentioned, we will be talking a lot today, or mostly about the Ukraine-Russian conflict. And Nadeem, maybe you can take it right from the top. How has this conflict, which dominates every area, how is it manifesting itself in the market today? I know most of February might not have been the conflict, but of recent it was. But that's on everybody's mind. So maybe you can jump into February, and then you can talk about the conflict that February ended with.
Sure. Yeah. Inshallah. Assalamu alaikum, everyone. Thanks again for joining us tonight. So I guess I'll just dive into it. I mean, overall, it's been a rough, really year for global markets and, even North American markets specifically. The last time we did this webinar, we kind of talked about how January was a rough month. Well, I mean, we saw a lot of volatility in February, and of course, it was dominated by the geopolitical situation right now going on in Russia and the Ukraine. I guess previous to that, we were talking a lot about the Federal Reserve and what they were doing, but this month it was kind of a different story here. So we've had 2 consecutive down months. I mean, overall, if we take just take a look at just the North American markets and what they did, I mean, year to date, you can see that overall, I mean, the TSX, the S&P TSX composite has actually hung in there, and it is maybe off about 1% for the year, and even in the month of February, pretty much kind of held its own. And the reason for that, and we'll dive into this obviously later on, is that the Toronto Stock Exchange has a different composition versus the U.S. indices such as the S&P 500 or the Nasdaq. The S&P 500, is basically in around correction territory before today, I guess you can say. It's been down about 10%, and even for the month of February, you can see that continue to kind of picked up from where January left off. And Nasdaq, which is kind of tech heavy, the tech heavy index, you can see that the technology year to date and even for the month of February has actually been probably, I believe, the worst performing sector to date. So kind of giving you a picture as far as what happened in February. Of course, what dominated the headlines were the geopolitical uncertainties that were out there.
Yeah. And of course, that area, Russia and Ukraine, it's a significant part of the world for commodities, resources, that the entire world depends on, or certain parts of the world depends on, to keep finances and everything else going. With sanctions, I don't know, there's tons of sanctions on Russia right now, whether it's the tech companies or the communication companies. One specific one, of course, is Russia being kicked out of SWIFT.
Swift, yeah.
And that's a big one, you know. So how does that affect globally, financially, and of course, more specifically, the investment climate?
Yeah, I mean, it's definitely a complicated situation. They've obviously first started off with the sanctions, and the sanctions are really kind of designed to block trading to Russia and kind of cut off some of the capital inflows that Russia and then really any country kind of relies on when they're doing business, right? And of course, when this, the next step was to kick them out of the SWIFT messaging system. Now, the SWIFT messaging system is basically a you can say a system where all global banks kind of communicate with each other to transact money and capital flows, right? And what's really happening is you are limiting Russia and its financial system and its capabilities by, number one, blocking trade, and number two, limiting the flows of capital that the country can do, and so you're blocking trading, you're limiting, you're kind of choking the pipeline for them to get access to capital, and so it is really kind of designed to force Russia's hand to kind of put them in a tough situation. Now, we've seen the impact of this. We've seen, like, the Russian ruble, for example, was down something like 30%. Of course, the Russian stock market was also, down heavily as well. And it is, Russia has kind of come back and said, well, we do have, foreign reserves and so forth. But again, a lot of these foreign reserves are actually held at European and US banks. So I think, it is an unprecedented step that they've taken to, number of sanctions is one thing, but, the SWIFT ban is actually quite large. And so that's really where, you could say it's almost unprecedented, I would say.
Has there been in recent time a similar ban on a country with the SWIFT?
You know what? I mean, not that I can recall, but I can, and if there was, I could be missing that, but definitely not to the magnitude of a country like Russia, right? Where now they're kind of limited in terms of how they're going to move funds. Like, are they still, is that pipeline with China still open in terms of capital flows? They have gold, it's really handcuffing them. But I can't recall a time where, a country at this size has been, pretty much blocked off.
Yeah. And of course, that, like I mentioned before, that area is commodity heavy. What are some of the affected sectors, you believe? What are some of the commodities that could take a hit or could have ripple effects for investors here in North America?
Yeah, absolutely. I mean, the commodity sector is kind of now front and center, right? And this is the Bloomberg Commodity Index. It's basically just an index that is composed of, future prices of commodities such as oil, gas, metals like nickel, aluminum, and things of that sort, right? Now Russia is obviously a major exporter of a lot of these commodities, such as oil. It is actually the third largest producer of oil, behind the United States and Saudi Arabia. So obviously that's a big thing. And what you're doing is, if Russia is a country that is producing a lot of the stuff such as oil, a third of the wheat, I believe, this is according to the U.S. Department of Agriculture, a third of the wheat is actually coming out of Russia and Ukraine. So naturally, when you're cutting off these types of supplies, you're going to get into a situation where prices are going to get higher, and that's where we've seen this commodity spike kind of happen. It was for the better part of I would say the year, or even into last year, you could see that commodities were generally on the up and up. We saw oil kind of bouncing back. Some of the metal, like copper, for example, had a pretty good run last year, but now we've just kicked it up a notch by pretty much banning a country that really is a net exporter of most of these commodities. Specifically, a lot of talk is behind natural gas, and maybe I'll just kind of dive into that. And this just might speak to one of the commodities and what impact it's having. You can see that, when it comes to natural gas is a little bit different than oil in the sense that natural gas is localized. It's not very easy to put it on a ship and ship it. So Europe, by that function, Europe gets about 30% of the natural gas, or 33% of the natural gas almost from Russia. And we've seen a spike in natural gas prices in Europe, and so again, it's something to obviously keep in mind, is that commodities have really had a pretty good run up in price during this time. And of course, we were already in somewhat of an inflationary period, a lot of supply constraints, a lot of when it came to commodities, there was a lot of there was an imbalance of demand and supply in some of the stuff such as oil and whatnot. But this has really kind of added a little bit more kerosene to the fire when it comes to commodities.
Kerosene, not gas.
Yeah. Yeah.
Good, good. So let's take a step back a little bit now and figure out this whole conflict thing. How has the market performed under circumstances where there's global conflicts? Of course, there's one that's ongoing, but in the past there were conflicts. How did the market perform or reacted to it?
Yeah, of course. I mean, this is not the first conflict, that unfortunately we're having, and it definitely won't be the last. And of course, history doesn't necessarily mean that it's going to dictate future and the exact same thing is going to happen. But I mean, if we do look back on previous events, previous global conflicts or wars, we have seen that it did. Again, the pattern has been that there's been kind of a fear or a pullback or some worry prior to the event. You kind of have a period where the market seems to kind of bottom out at the time of the invasion, and then subsequently, if you just do take a longer look, you do see the market kind of bouncing back, right? Of course, not in all cases. I mean, of course, there was the Afghanistan war, and I'm sure there's a lot of other elements that are playing into this, but this is obviously just one kind of slide or chart that you can kind of keep in mind that, look, when there is war, it's not necessarily something that is going to definitely end in end in a bear market per se. At least that hasn't been the case previously. I mean, the only thing that I will say is that this time around, though, again, I'm not a geopolitical scientist. I'm not that's my dad, actually. That's not me. But we do have a situation where these previous conflicts that we've had, right? It's been kind of like a superpower versus a small country, right? At this time you have a superpower such as Russia with nuclear warheads. So although I am pointing out this slide and trying to keep people in perspective, I do have to kind of acknowledge the fact that this time around we are dealing with somebody who can put back and does have the arsenal to do so. So it's something to definitely keep in mind. And I guess having said that, kind of putting this into today's perspective, we do see the bearish feeling is out there. This is basically a AAI investment sentiment survey, and this is conducted pretty much every week. And it's basically a survey of some of the institutional investors out there and what their sentiments are on the outlook of the market, right? And rule of thumb typically has been when there's it's regarded as a contrarian indicator, meaning to say if it's if it's too much swayed on one side, then do the opposite, right? So for example, back in March 2020, which everyone can remember was the at the height of the pandemic, or that's when it started, the readings, there were a lot of bears out there, and the bears outweighed the bulls. And ultimately, it gave you a good sentiment as far as what investors were feeling. And history kind of, and if you rewind back in time, it was proven to be a great time to buy. And fast forward to today, the sentiment readings have gone as bad as they were back in March 2020, right? Again, history doesn't mean that it's going to dictate future, but if you were to kind of use this as a rule of thumb, you can make the argument that, sentiment is so bad, I'm going to take the other side of the trade and get into the market again. And I'm not making this as an advice, but just kind of pointing out the fact that a lot of people do look at sentiment readings such as this to find out what people are feeling, and kind of do the opposite, so to speak.
Yeah, and of course coming back to the whole world of investing, of course, the central bank, and whenever they move the needle, big things happen in the market. How could this conflict impact central banks' policies, which is of course already under severe pressure?
Yeah, I mean, that's a great question. I think we are like Jerome, the Fed Chair Jerome Powell was had a Senate hearing today, and he was commenting on that. I mean, we've really seen prior to the invasion, there was the market was looking at a 50 basis point rate hike by the Fed. And fast forward today after the invasion and some of the issues that we've seen in terms of commodity price, this, that, the likelihood of 50 basis point has dropped down to a 25 basis points in a span of maybe about a week or two, right? And even Powell kind of alluded himself that the situation is a little bit murky, and I think they're going to keep a close eye on it, and not in so many words, but it definitely has the ability to impact economic growth. And if that's the case, then a 50 basis points could be an overkill, for example, right? So the thing is, it is having an impact now on central bank policy. Now, on the flip side, the fact that commodity prices are going higher, I mean, this is the dilemma that the central banks around the world are going to have to face, is that you got commodity prices going higher, so that is going to contribute to inflation. But on the flip side, the fact that you're kind of cutting off capital flows from a country like Russia, how does that impact the economic growth of Europe specifically and the rest of the world? You do have to kind of balance that. So, but I will say that it looks like it is going to have somewhat, not an impact, but definitely the Federal Reserve is keeping an eye on things. Now, here north of the border, the Bank of Canada did increase rates, and I think again, it's going to come down to a question of how many times and how much, not if they will. And at least that's what the market's engaging right now.
Right, and of course, and that's probably the bulk of my questions. I've got one final one, maybe, and just quick follow up. How could this situation, the conflict, the war, looking at just coming out of COVID, volatile market, quite a lot of pressure on an investor, and now of course the conflict, right? What are the sentiments? How do they manage their thinking process as an investor in moving forward?
Yeah, I get that. That's a good question. Again, as portfolio managers, you do have to keep you do have to keep read the room, I guess, right? You do have to figure out, okay, what's going on in the world, and is my portfolio kind of in some cases adjusted to this, right? As from Sharia portfolio, if we as a firm, when we're coming up with our investment thesis, when we're putting our portfolios together, we obviously do these things. We are currently overweight, and we have been overweight energy and material stocks for quite some time. This is not something that we got in just recently. That's not because we knew what was going to happen in Russia. It's more that the larger dynamics were already in play, and this obviously has added wind to the sail. But I think as investors, and we said this, at our year-end review, is that the winds are changing. Definitely we're seeing that, and factor a geopolitical situation is the winds are definitely changing. So if you're an investor, you really have to kind of make sure that your portfolios in some cases needs to get at least adjusted a little bit, right? So that's definitely it. I think as an investor, we are cognizant of what's going on, and we realize that what may have worked last year, 2 years, 5 years ago, might not work this year or the years going forward.
And I know you showed a chart on by the invasion, right? Where you showed how the market performed during, I think, a series of about 6 conflicts and wars. Has there ever been a time when there was a seamless transition from one global event like COVID, and another global event like a conflict, almost seamlessly back to back, no space in between? Has there ever been something like that in the history of the market?
I mean, as at least in my experience, my 20 years, right? The only thing that I can probably relate that to is the tech bubble bursting followed by 9/11, which was kind of the 1-2 punch, right? You had a situation where equities were inflated, a bubble had burst in technology, and then you factored in a geopolitical event, right? Again, it's a different situation, of course. But what we did realize, from that was that, from those pivotal moments, there was a readjustment. There were sectors that, things had to kind of settle down, so to speak, right? And so that did happen. I guess that would be the period where what would come closest to that 1-2 punch, right? Where you got one when you just took one big hit and now you got another one.
Yeah, or 2 double punches.
Yeah, exactly. Yeah.
Well, Nadeem, I don't think we have any questions from our attendees, but this was definitely an excellent discussion on the topic. I know our team have been working hard with our clients and explaining what's going on. And we'll continue to do that. If you've got questions, of course, you can contact Nadeem at any time, visit our website, reserve a call with him and get your questions answered. We're, of course, we're preparing for Ramadan, and we want to wish all of our brothers and sisters who are on this call that in your preparation for Ramadan, you keep us in your dua, keep the world in your dua. A conflict is never a good thing, wherever it is. We pray for the victims and we pray for peace, and as we prepare for the Ramadan, which is going to be within the next 6 weeks or so.
We do have a question here.
What is that? Sorry.
We do have a question here, I guess.
Okay.
Where one brother's asking, what is your take about investing in precious metals? So I guess that would mean, as precious metals would mean stuff like gold and silver. I guess, again, we're not here to give you specific stock recommendations, but what we can tell you is, number one, in the past, gold and silver, gold more than silver, have been areas of safe haven where, in times of political tensions and whatnot, gold can weather the storm well. And in fact, in some cases, it might even, appreciate in value. And, as far as us, we don't have any position in gold per se, but we do have some companies that have a little bit of gold exposure in mining. But it's not something where I can say that, we're placing big bets on gold. But that would kind of be it. So I would say, gold has done well recently. I don't have the charts on me right now, but I do know that it's done better than Bitcoin, at least for the last couple of months or so. And I think there's something to be said about that, I guess. But yeah, that's our take, is that it's not a bad hedge to have right now, given the situation we're in.
Yeah. And there's another question here about do most banks in Canada have halal investments or offer portfolio investment, halal portfolio investments?
Yeah, I mean, so the answer to that is no, not to my knowledge. The banks don't, if they do have it, they're not promoting it. I would say, the quick answer is no. The banks aren't doing it. I've worked at a bank, and so I do know that there's not something there, and that's why I joined Sharia Portfolio. I was previously at a bank and kind of said, hey, we should do this, and they're like, hey, this is a good idea, but maybe not.
So if you're looking for a halal portfolio, I guess it's Sharia compliant. It's Sharia portfolios where you might want to start your search. We are a dedicated Sharia compliant wealth management company in the Canadian market. Again, well, thanks again, Nadeem, for your insight and the value that you bring to Sharia portfolio, as well as to our clients across Canada. All right. Well, thanks again. And those of you who attended, we really appreciate the time you spent with us. Inshallah. Assalamu alaikum wa rahmatullahi wa barakatuh.